Good afternoon and welcome to Markets Today on this 22nd day of the second month of the year 2022. We have seen significant improvement in the market with the Nairobi Securities Exchange 20 share index up by 0.15%. The all share index is also up by 0.04%. These are signs that we are experiencing some good experiences in the market. But beyond that also, we have seen many companies reporting super dividends. BAT Kenya is giving out 50 shillings per share, followed by several others including EABL, and we are going to have that conversation here today. Before that, let's go to the market and see what the market had for the day. All right, let's start with the gainers of the day. And the gainers of the day were led by Uchumi Supermarket that went up 10% to close the day at 22 cents. Sasini PLC closed the day at 21 shillings 70 cents, being 7.43% up. Umeme Limited closed the day at 6 shillings 50 cents, being 6.21% up. And Kakuzi PLC closed the day at 415 shillings, being 5 shillings and 5.73% up. The top 5 list of gainers was closed by Liberty Kenya Holdings Limited that landed at 7 shillings, being 5.11% up. Let's go to the losers of the day. Everready East Africa shed off 7.29% to close the day at 89 cents. Home Africa was on the green yesterday, enjoying some attention. Today it looks like supply outstripped demand. It closed the day at 37 cents, being 5.13% lower. Olympia Capital Holdings, also a part of the gems market, closed the day at 2 shillings and 1 cent. Being 3.83% lower. I&M Holdings PLC closed the day at 20 shillings 60, being 3.51% lower. Longhorn Publishers Limited closed the list of the top 5 losers, having landed at 3.86, 3 shillings 86 cents, being 3.5% lower. We are expecting that at least they'll benefit from the extra injection into the education sector from the supplementary budget. The top movers were your traditional big boys. Safaricom PLC traded 6.8 million shares, followed by Absa, which has been enjoying some good attention in the past 1 week, traded 6.2 million shares. Kengen Company Limited traded 2.2 million shares. What a performance. Equity Group Holdings PLC closed the day at 1.5 million shares, and East African Breweries Limited closed the day at 1.06 million shares. All the top 5 traded above 1 million shillings each. What a wonderful turnover in the market. Well, to join me in the conversation that we are going to have today, I am joined by Steve Biko Wafula, who is an analyst from the Soko Directory. He's also Soko Analyst on Twitter. Welcome, Steve.
My pleasure, thank you.
What do you make of the movements in the market in terms of the sterling performance, in terms of volumes, and of course the gains that we've seen?
Well, the economy is recovering from COVID. We can see the rumbling in the economy. If you look at the macroeconomic indicators, things are actually positive. We're even seeing people saying that the economy will grow at 6.7% per annum. So it's actually good. But the most important thing is that we've seen a lot of global brands, Apple, Samsung, Tesla, announcing the results. So it's the season for announcing results. And you know, most of them are actually looking at how the last quarter was and how the beginning of the year is. And basically, I think everyone is actually eager for something positive. So markets, the economy is picking up, especially in key sectors. We're seeing telco, we're seeing construction, we're seeing logistics, we're seeing real estate, we're seeing even the performance of the shilling since yesterday, it's actually done well. It was actually stronger than the euro, though still performing badly against the pound and the dollar. But given that as the other sectors announce results and we look forward to more results, the impact is actually touching on the stock market. And since the stock market is the heartbeat of the economy, it gives an overall feeling of what's really happening around. And also, politics has a positive impact on it because now everyone is actually looking at the economic issues, bottom up, top down, the issue of food prices, the issue of foreign investors. So once everyone starts talking about the economy and the business, this actually has an emotional aspect to the stock market. So for the next quarter at least, for the first and second quarter of this year, we should see the market growing, and at least we should see the 20 share index and the all share index at least doing better by 0.5% every day.
Yeah, I agree with you that the ideological vibe around our politics this year has significantly and positively affected our economic performance, because it means then we are maturing politically. It's not about who, it's not about which tribe, and it's more about what you want to do for the country. But sticking to the market, which counters are standing out for you, or which counters are you keen on this week?
Well, the unfortunate bit about our stock market is that we have over 60 listed firms, but you only see top 10 stocks that actually perform. Like yesterday and today, we've seen a net sell from foreigners at 48%. And that's why you're seeing a lot of movements. They're changing positions because they've taken a long-term view, so they want to actually now change and take a long-term view. You see, like a share like Kengen has actually dropped to its lowest in history at 3 shillings per share. It's actually undervalued, and it's actually a good share to buy. So stocks like Safaricom, Equity, KCB, ABSA, these are the top 4 for me. Basically, banking and telco are the stocks that are actually making it move. And it's because of the results they're getting. We've seen what Equity is doing in DRC. We've seen ABSA's gotten 1.3 billion USD to actually on lending towards SMEs. We've seen Safaricom actually consistently sustaining campaigns for its products. But the amazing thing is, and BAT, number 5, we've seen good results in terms of dividends. Most of the top stocks actually giving out dividends, and because we saw 2020, 2021, many of them didn't give. So this is also a very positive aspect, the dividend yield for the shareholders. It's actually positive, and we've seen this actually changing the perception in the market.
Yeah. All right, you've talked about dividends. Let's get to it. That's the conversation of the day. Companies are reporting splendid growth in profitability, and they're sharing these profits with their shareholders through the dividends. What's driving this good news?
Basically, 2020, 2021, we had a depressed economy. Most of the listed firms did not announce very good results because basically the economy was at a standstill. But since last year, October, when the president opened up the economy, things have been picking up. And the results are actually going to be more impressive as now the economy goes full. So, whether we like it or not, it will be positive because the last 2 years have been at 0. So even if we're doing 0.5 or 1% or 1.2%, it's actually going to be a significant growth in terms of numbers. And this is going to have a positive impact on the bottom line. And at the end of the day, companies like BAT, banks, Family Bank, ABSA, Equity, KCB, they're going to actually give out dividends and actually show performance. BAT has given out very good dividends, notably because of, it's a listed brand that's actually under a lot of strict regulations, but they're doing very well. It's one of the key contributors to our taxpayers. And it's seen significant growth of actually 10.1% in terms of the last 6 months because of the economy opening up and things like that. We've also seen EABL actually doing the same, and because they're one of the brands that were actually affected with the lockdown, but now they're actually doing very well. If you look, even if they're doing 2% in terms of sales, they're actually optimizing their production, they're optimizing their sales in the market. And they're more or less a monopoly.
So what I'm hearing from you is that this is merely a recovery. We are recouping what we lost in 2020 and 2021.
It doesn't show that the economy is actually picking up, no. We're actually just simply recovering to more or less likely to the position we were in the last quarter of 2019. The true impact of whether the economy will be growing or not will actually be seen in the third quarter, when now we understand how the politics will be playing. We understand the true data from the impact of COVID. And let us not forget that Kenya is actually a very interconnected economy globally, Africa and globally. So the issue of Ukraine and Russia is actually also going to play a key role, especially in exports.
It's coming out as a significant risk factor for
yes,
the country.
because of, especially in terms of, it will be a very significant risk for horticulture, tea and horticulture export, and also just the recovery of the disruption in the supply chain is actually going to also be impacted. So how the United Nations and the G8 and NATO will actually handle the situation will be able to have a significant impact on emerging and frontier markets, and Kenya is actually a key emerging market. And also we've seen what's happening in the crude oil. We've seen it's actually gone to $90 per barrel. Yeah. So this is going to have a significant impact on our energy costs overall. So the third quarter of this year will actually be able to tell us whether we fully recovered to where we were in 2019 and whether now we can be able to tell the numbers. My worry is that we don't really have proper data. We're not really able to monitor because we're still looking at the 2020 numbers.
But you know, the question on data, Steve, has been a big question in the economic space because we always wonder, is the data that is being fed on us by the government actually accurate? Because, for example, for the country to have a conversation right now about the high cost of living, a month after the Central Bank Monetary Policy Committee sat down and decided that they want to maintain the interest rate because inflationary pressures are contained and that there is not too much inflation. But the people are complaining that there is too much inflation. In fact, I have seen some demonstration on some tables on Twitter of people doing comparisons of last year and this year, and you find that overall inflation for an average household basket is 20%.
Actually, the correct numbers would be, it's more than 110% in the last 5 years. If we're looking at the top 10 commodities from sugar, oil, salt, Royco, rice, just basic household goods.
Are we saying then that we can no longer trust the data from KNBS and CBK?
I think, no, the data that Kenya National Bureau of Statistics releases is actually accurate, but it only covers a particular segment of the economy. KNBS looks at civil servants, teachers, and the police force. These are people who are actually paying pay as you earn tax. So that's how they're able to monitor and be able to tell. And you see, these are people who have money to spend. So if you're looking at civil servants who are earning more than 200,000, teachers who are earning more than 100,000, they will not feel the pinch of any inflation pressure.
100%
but
or
20%. You see,
20%.
this is only 11% of the economy, I mean of the population. The other 89% of the population, they're not accounted for. People in the SME, in the informal sector, they're not being accounted for. Okay. So, and I think Kenya National Bureau of Statistics is actually overwhelmed in terms of collecting data because we don't have full data for 2021. We don't have full data in terms of the impact of COVID.
So in principle, we simply don't have data in this country.
True, because if you look at the comparison under the conversation we're having currently across the country in terms of lowering food prices, we don't have the correct information. We did try to go we compared 5 supermarkets and we looked at the basic top 10 goods that a normal middle class family can afford, and we realized that the differences in price is actually up to 50 shillings. So we are in an economy whereby the government has actually left Kenyans at the mercy of manufacturers and retailers. And we have laws that should be able to protect the consumer, but they're not being implemented. And the people who are supposed to be doing this are busy doing politicking. So I think
it's a political season. They can be forgiven as long as work is happening and they are
But that's why we were supposed to have the civil servants to actually be able to maintain the economy while politicians do the politics.
It's not happening as we had hoped, though. I want to get us back to the dividend conversation. Should we expect even better performance when banks start to report from next month?
Yes, more impressive. In fact, you'll wonder whether we had COVID or not. And simply because the recovery period is actually going to be very impressive for the telco sector, tourism, tourism and banking and financial services. It's actually going to be amazing, especially for top tier 1
banks.
Tier 1 and tier 2. Tier 3 banks are still trying to meet regulatory levels.
Yeah.
But tier 1 and tier 2 banks have actually done very well. Their profits post-tax will actually be very good, and especially in terms of mobile loans, because of the last 2 years, most of them have actually invested heavily into mobile
I think
banking.
the major mobile loan lenders would be KCB, NCBA, and Equity Bank.
And also Cooperative Bank.
Oh.
In fact, Cooperative Bank has a very interesting platform for mobile loans, and they do better. So the results are going to be impressive. Whether they'll pay dividends or not, that we will be able to see.
I'm actually optimistic that they do.
Well, most of them...
Because last year, really...
Why I'm pessimistic is because most of the banks will say we won't be able to pay dividends because we want to invest more into cybersecurity, we want to invest more into digital lending, want to, cover more costs. Central bank has come up with more liquidity capital requirements. But I'm hoping that, and also a brand like Equity with the serious investment in Central Africa, that can also be another issue of them not being able to give dividends. But most of them are actually looking at how they can be able to invest in the digital realm and internet point.
Is it possible they can chew gum while scaling the staircase?
I don't think so. Primarily because of what central bank is doing in terms of, there's a public paper that central bank has released, digital currency,
yes,
discussing that, and this is going to have a very significant impact.
So that is a game changer.
So most of them will be holding back with the capital, trying to see what central bank will come up with so that it can be able to define the next level of investment. But brands like BAT, EABL, I mean, the recovery has been amazing. So they're definitely going to be able to give dividends to their shareholders.
Yeah. We will have a conversation about banks like companies like BAT and EABL, and perhaps have a look at that. But I want also to have a look at, you said that there are only around 10 companies in the market that are active at any given time. Is there a way in which we can make the other companies as liquid and attractive in the market as well? Is it an issue of dividends? Is it an issue of liquidity? Or what is it really?
Well, this is a very difficult conversation to have because I'll have to throw a lot of regulatory bodies under the bus. We have over 60 plus listed companies on the main exchange and the SME or GAMS exchange. We also have the secondary market, and we've seen the secondary market doing very well. I mean, every bond or treasury bills actually listed, there's always a huge oversubscription. The primary market is the problem is. You see brands like Safaricom, EABL, Equity do very well because of how they perform in the market and their interest in how they're doing in terms of corporate governance. We've seen a lot of public interest in these brands, but you have other brands that are, on a day-to-day basis, even the share will not trade for a couple of months. And this is because of...
Yeah, I was looking at GEMS on Monday and I realized a share like Kakuzi, the graph is flat for like 3 months. Share price is 1,500 by the way.
Kakuzi is actually an interesting share because...
not Kakuzi, Kuruitu, sorry.
Yes, Kuruitu.
Yes.
The reason is some of the companies that are listed do not have really tangible value or product in the market. So very few people know about it. So one of the biggest challenge in far as investing at the market is concerned is lack of civic education for people to understand the benefits of investing in the market. Secondly, there's been concern over corporate governance for listed firms where many people have lost their investment and they've kept off. People who bought shares in KQ, Mumias, Uchumi, Everready, CMA and NSC took long to suspend the listing, the trading of these companies, and a lot of people lost a lot of money. So there's lack of investor confidence at the market. Thirdly, basically, foreign investors have access to money, which means they have access to data. They're able to understand the movements of the shares, so they're able to participate. Like yesterday and today, we've seen a lot of net sales by foreigners, accounting for more than 49%. And this shows you that foreign investors are actually taking more advantage of our own local market more than us. And this I will put the blame squarely at capital markets and NSE because we've challenged them to increase awareness of the market. We've challenged them to increase the need for corporate governance. We've challenged them the need to actually do what you call roadshows. When Kenya is actually, the last Eurobond we took, Kenya when our officials went on a roadshow in the US and UK talking
There
about...
was none here.
So we don't see NSC and CMA doing roadshows from Mombasa to
Perhaps
Bungoma.
they believe we don't have the resources that are there in the
No,
UK
no, no.
and the US.
Actually, if you look at the last infrastructure bond that ended last
Of
last
course,
week,
we have the resources. I think it's just
Kenyans
a matter
have
of
money.
faith. Yeah, yeah.
Kenyans
yeah.
have actually almost more than 500 billion in fixed deposit accounts. This money should be in the economy actually circulating.
We hope. We hope. I think on my end, perhaps what I can say is there's a lot of foreign investor influence in the market. So that now the foreign investors define what moves as often as it does. And this is across board globally. They would advise, they would probably identify a few shares that they think are blue chip. And then they focus on these few shares for a very long time until and unless someone new comes up. Before Safaricom, I think the focus was on EABL, Barclays Bank, KenGen. But when Safaricom came, then they realized the real value is in Safaricom, and so focus has significantly remained on Safaricom. But what you're saying is also true, that the local investor market can still be tapped in, and we also still need to build up significantly on value that is being offered in the market. We have to take a break, Steve. And when we come back, we'll talk about all these guys, EABL, BAT, Unga Group, Current General. They are all declaring super dividends, and you can take advantage of it. Don't go away.